Good morning and happy Friday, folks. Alright, so for those of you in my room, I'm going to be on the road here today, but I wanted to jump on, talk a little bit about yesterday, and really for the first time since the push off the bottom, the great short squeeze, little bit of a flush there. 40,000 foot view, I don't think it changes too much. If we look at the sheet here, every index gets a positive score, most of your sectors get a positive score. And then, Google, Microsoft, AMAT, Amazon, Tesla, they get a little iffy, but then you've got JP Morgan, Goldman, Meta, Netflix. They all look pretty good there, so the theme over the last few weeks here during the short squeeze, bulls are making a lot of progress. Look at a weekly chart here on the SPX, and that little negative momentum cross, they quickly try to get that back above zero. They get priced back above that 21 EMA, and for now, they do have a brand new weekly buy signal. And then off the daily time frame, momentum shifts back above zero, price back above that 21, back above the 50, and they're trying to cross the 21 back above the 50 itself. All of which would imply, if we do pull back to back test that 5,500-ish level, daily 21, daily 50, 4-hour 21, momentum and structure, a little bit more aligned here to want to buy that dip. If we do pull back, and more importantly, if we do hold. Or we could gap up this morning, and they pump it, and next thing you know, we got ourselves a brand new all-time high. To try to figure out that path forward, do we get a bit more of a flush? Do we take out the highs immediately? Go find your clarity, go take your key levels on a 1 hour, 30-minute, 15-minute time frame. What I would suggest is, on the S&Ps here, watch that 1 hour squeeze. We've got the 1 hour time frame building up energy, gearing up for some sort of move, and then I would take these two key levels. Hourly 21 EMA, the hourly 50. Mark those up, make those your over-under levels. Meaning if we're trading in that box, be a little patient calling for a long or calling for a short. If the bulls can take it back above and keep it back above that hourly 21, and then they try to pull momentum higher, they cancel the 30-minute, 15-minute sell signal, you get the 15-minute, 30-minute buy signal, in that 1 hour squeeze back above the buy zone, you might go look for spots to get long. I think JP Morgan looks pretty good, I think Meta's pretty solid. Vice versa, they break the hourly 50. 30-minute, 15-minute, 5-minute sell signal. At that point, a much better chance the squeeze here wants to break short. That could kick off a flush back down towards 55.25, 5,500, during which, if you've got those shorter dated calls, it can all get a little uncomfortable. In the box, be patient. Above the hourly 21, look for a trigger to get long. Don't just buy calls because we're above a level. Get price above the level. See price hold above that level, then get a trigger. My trigger is always a lower time frame squeeze and a lower time frame buy signal. They break it, careful on the buy side, and maybe look for a short down towards the lower levels of support. And then for the QQQ, technically the 1 hour squeeze fired at the close, and we are getting a bit of a gap this morning. NQ up 0.8, S&P's up 0.5. But as far as clarity, I would give you these same levels here. They break the hourly 50. You've got all these lower time frame sell signals. Might be room for a move down towards 470 or lower. They pop it, keep it above the hourly 21, pull momentum higher, get rid of all the sell signals, bring on some fresh buy signals. You might go look to buy it. Or you're looking at Nvidia, Apple, Meta, etc. Indexes first, and then the stocks. Alrighty, guys. So a few things there for you, and then for the most part, I like how we've handled the upside here. When you get these crazy short squeeze kind of moves, very easy to make some cash to the upside. Even easier if you get caught with your trousers down to get back all that profit. Even on a day like yesterday. You keep on playing those short dated out the money calls really aggressive. One little pullback to support can wipe out a lot of forward progress. What we've done in the room, the lock and the roll. Find a good setup, take a position, catch a nice push, take the profit, then take a fraction of that profit. Could be 10, 15, 20, 50%. Take a fraction of that profit, go open up a cheaper, further out the money, quote-unquote free trade. You're playing with profit. For those of you in the Simpler Essentials room, we had 1, 2, 3 profitable trades on NVIDIA. The fourth trade, the 135 calls for today, probably going to expire worthless. We'll take an L on that one between the 4 trades. We got a nice net profit. And then in the Mastery, TSM was nice to us, Microsoft worked, and then for AMD, we hit it one time, took our profit, hit it a second time, took a little more profit, and then on the third trade here, we've got the 170 call fly for next Friday. Might work, might not. If it doesn't work, by design between those 3 trades, we end our AMD endeavor with a nice net profit. It's a good position to put yourself in as a trader. They keep on pushing the market higher. You keep on pulling out a little profit. The market collapses. You'll take a few L's. The last trades will always be the losers. Between all of them, you got yourself a nice profit. But alright folks, wish y'all the best of luck today. I will be in touch. And then yeah, key levels, internals, all that good stuff. Adios.